Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing Podcast. CMQ investors, welcome to the show. It's great to have you here. In this episode, we are live on Instagram right now. I'm answering questions in the comments. As I mentioned, I've been sick. My voice was gone. It's still not 100%, but I'm back, and I want to catch up or make up for some lost time here. I had planned to release a lot more episodes in the last week or so, but I was unable to for the reason I just cited. So we're in this IG live right now, and I've got a couple questions here that I'm going to answer. NJ Phone Shop asked me if I like REITs. I am not against or for. I own real estate, but if I'm going to own real estate, I want to live in that real estate. Now, that's just me right now as a person who is, in their relatively early 30s. So I'm not trying to say that that is what you should do. But I think from just overall, that's my approach. Like, I think if I look at my portfolio in total, real estate's like 20 to 25% of it, and I live in it. So there's a certain value that I'm getting from living in my equity versus actually just looking at whether a spreadsheet or an online brokerage account and seeing the numbers change. So Charlie Munger has a quote, though, and not to say this is about REITs, but he says the best time to own a house is when you need one, or the best time to buy a house is when you need one. So, I'm not an expert at real estate investment, but I think there's certain value to it that is, it's worth considering. Okay, David says Tesla is extremely overrated. Other new EV companies are even worse. What do you think of Rivian hitting a $110 billion valuation with no cars delivered? I'm glad you bring this up because I think that's crazy. And I know people who have bought that or bought into that stock. I think it's a terrible idea personally, because again, if a company doesn't make any money, that's just the potential risk you're taking on is huge, right? If you're going to buy when you're buying a stock, in terms of the risk you're taking on, if the company doesn't even make money as is, that's a huge gamble. Huge. It doesn't mean because the space is good or Amazon has, a stake in it. That's a huge gamble. And that's one of the reasons I try to avoid IPOs. It's not to say that you can't make money doing that. It's just it introduces a whole lot of gambling that I'm just want to avoid generally. And the likelihood of that not working is a lot greater than the likelihood of it working. And I just know from all the reading that I've shared with you guys, overconfidence is a killer for us as investors. And so an overconfident version of me would think that I knew something or had some foresight into the future of the EV market that would allow me to, prosper or profit from buying, shares of Rivian at this current stage. I just think it's a bad idea. And I think it's one of those decisions that you would end up looking back on and regretting doing. There's a great kind of, I guess, sort of a framework to think about, which is it's not about the results, it's about the process. So if you end up getting a good result by buying Rivian, you could say to yourself, well, I was so smart, or, I knew it. But if you got a terrible result and you look back at how you made that decision, I think you'd see that you didn't really have a great process. You were being speculative. But there's a tendency, and I've experienced this myself, to get kind of swooped up in a new exciting category, or, just the familiarity of the fact that, Amazon's in on it. And, you're thinking, I think there's some anchoring that goes on with the fact that Tesla has been this incredible performing stock. And then it's like, well, this is the same space, and they have this unique approach and angle. And again, Amazon, and, it's just a lot of cognitive biases that all kind of get construed or that all kind of come together and cause some irrationality from us as investors. So I'm big on avoiding it. Again, if a company doesn't make any money and they've not delivered a single car, what are you betting on? And what kind of a premium are you paying to take advantage of this quote unquote opportunity? So I'd love to hear your thoughts, though. I don't think I have all the answers on this. Mohit says long-term stocks to buy. Long-term stocks to buy. Again, I could answer this, but I don't think it's helpful for me to answer this. It doesn't really help you come up with you need to have the framework and the muscle in your brain to actually answer that question. I think if you don't have that, then listening to me would be really bad, because what if I'm way wrong? But I'll try to answer the question still, but I just want to preface it with that. I'm more than happy. I love these conversations. Like, I'll have these conversations with friends. I just don't want, for me, the most helpful thing has been developing the muscle in my own brain to answer these questions for myself. And another important thing is the importance of thinking independently. So who cares what everybody else thinks, including what I think? What matters is what you think. And so if you can't state why you think or what conclusion you've reached and why you've reached it, it's not, you're delaying kind of going through the process and doing the hard work that you need to do to actually have your own opinion on this stuff. Look, long term, I don't know about the price right now, but I think look for a company that has great fundamentals, that has pricing power, a strong brand, doesn't require a lot of additional capital, has a really strong return on capital employed. In a company with great management. That's something I'm trying to get better, or I shouldn't say trying to get better. It's something an idea I'm taking even more seriously, because it's something I've learned from investors as they get older is they put a lot more emphasis on the quality of management, because I guess it's so important. And I think there's a certain pattern recognition that comes for you to be able to spot a great manager or a great management team. But that is critical, because you could have an awesome business that just has poor management and doesn't execute on what is otherwise a great strategy. So if you're thinking long term, you're thinking about a company that's going to do well in the long term, which doesn't just require a large addressable market, a space that has a lot of room to grow. Let's say a great product or service, or really healthy underlying fundamentals. But you need a management that's going to be able to execute and actually seize the opportunity, and the ability to spot the managers that can do that. I don't think that's something that I do intuitively yet, but it's something I realize that's going to be an advantage, and I want to think more thoroughly and more. I just want to think more and more about that, because that's the only way I get better at stuff. Is I just don't stop thinking about it. Look at Tim Cook at Apple. It's an easy example. Not everything's, of course, he looks like the greatest manager in hindsight, but they put the right person in place. But what if they put the wrong person there? Would Apple still be where Apple is today? And I think that's something that illuminates the importance of management and how you could have everything else working for you, but with the wrong leadership, the wrong management, you're not going to get the same result. Okay, really enjoyed the podcast. This is from Ritter PD3. What's up, man? Let me make sure I got your name here. Patrick. What's up, Patrick? Let's screenshot this. Patrick says, really enjoyed the podcast. Could be fun to give a quick analysis of different Berkshire Hathaway Q&A sessions. Yeah, that's interesting. I'm not sure, again, they're like 3 and 4 hours long, so I'm not sure what the analysis would entail, but I'm open to all ideas. I plan on making a lot of podcasts, so I'd have to think. I've done things where I've taken like everything that they've said about a certain topic, and I've made those YouTube videos. For me, I think with CMQ being a long-term thing, I want to make sure we have like the pillar frameworks, or I keep saying framework. I want to make sure we have the evergreen content to go back to and say, like, if you want to learn about this subject, like, here's our podcast on that. But then it's looking at kind of what's going on now and trying to make sense of it. Because I think, what can I create that's helpful for you and helpful for me? And that is our ability to look at what's happening now and make sense of it. And whether now is now, or now is, whatever now is in 10 years or 5 years or 4 months, be able to make sense of the current craziness. Because I find the biggest problem to solve for is how overwhelming it can be to be an investor. There's so much information, there's so much noise, there's so many decisions you might have to make or avoid making, and the consequences are real, right? These are financial consequences that come with they come from your decisions. So, okay, Patrick says, Munger always says that there's so much attention on IPOs that the odds that it's not an overinflated price are too high. That's very true. And the other thing, I'm not sure if this is Munger or Buffett, but I agree with it, which is, you can't predict the future in anything in a complex world, but a past track record is the best indicator of the future. It's not perfect, but it's better than, for example, if you interview someone for a job, they interview great, but they have a track record of, getting fired from previous jobs for poor performance. You might be dazzled by their interview skills, but that past track record is the best indicator of what you're going to get. And it's not perfect. We know it's not perfect, and there is always exceptions. But when we look at a company to potentially buy a piece of, what's their past track record in terms of their earnings growth? And a company that doesn't have a track record because they're brand new, it doesn't come with that. So the uncertainty is even more so. There's more uncertainty than there already is when you buy any company. Because as investors, we're dealing with an uncertain future regardless. My view on cryptocurrency, I think for my own portfolio, I want to have between like 1 and 2%, maybe 3% in cryptos. That's it. That's my view. And I'm not into altcoins. I think, if you're going to own any of them, own the big ones or own the ones that are not going to be a scam. The last episode I did before I got sick was about that Squid Game coin and how people lost all their money in that. And so you want to avoid those kind of projects. So I think having 1 to 2, let's say 1 to 2%, just to put it out there, I think that's a very reasonable percentage of your investable assets to put into crypto, where if it goes to zero, you don't want to, it's going to make a bad joke, but you don't want to, call it a day. But if it, has some sort of a extreme return that's irrational, but you're able to capitalize on it, then at least you get a taste of it. And I think overall blockchain and everything related is really important. I think it's going to be a part of our future for sure. I'm just not so into buying crypto as an investment, not any crypto, but like Bitcoin, for example. I just feel that's become very pump and dumpish. And doesn't mean it won't go up and then people won't make money. It's just, there's a time when, I want to take some chips off the table. And that's what I did in recent months. I currently own Ethereum and Solana. Or is it Solana? I don't even know the name of it. That's how speculative it is. I'm like the other one. I own Ethereum and that other thing. The other one that they have is, Solana. And I think it's 1.5% of my portfolio. It's not something that, again, I'm not betting my life on it. Good morning from India. Hello in India. What do you think about, this is a great question. I'll make sure this is part of the episode. It's from Jalaj. I'm sorry if I'm not saying your name correctly, but Jalaj asks, what do I think about Meta now? I am not understanding a lot of things here. So, okay, I've not thought about this out loud. So you're getting like a very raw opinion here. I think that this metaverse that is being discussed, I think there's definitely a future in that. Now, how it makes money and how popular it becomes, I have no clue. I know I've got a good gauge for the future of tech in the sense that for a big part of my business is identifying companies that have products or services that I'm excited to market that are typically in like the tech, called future tech space. So I do think I have a good taste for that stuff. And I can't say that I am so excited about the metaverse that there's parts of it that I think are really neat. But then there's parts where, and this could just be me where I am in my life, but I just feel like there's a lot of stuff we need to get back to in our universe or our world, the physical world, that would be more value add. I don't know if society is necessarily excited or benefiting from like more just, digitalization of everything. Like we're at the point where your reality is becoming digital. I think there is so much value to be had in the physical world while still having a really amazing digital world. With that being said, there's clearly a lot of market research that went into this. I don't think that they're making this decision to go all in on the metaverse just because they need to like change the brand. I think there is, without a doubt, a future market that's going to be excited and into this idea. And that's, to me, I like to see companies be bold, and I'm not faulting Zuckerberg or Facebook for going all in on this. With that being said, I don't know how far off it is. I think there's a little bit of a overcorrection, or not overcorrection, but overreaction to it, which is typical, right? So, the fact that the day after this news comes out, I'm seeing on Twitter, 6 ways that marketers can take advantage of the metaverse. It's like, let's pump the brakes a little bit. How did everybody become an expert on this already? So as far as this idea that our interactions in like this kind of interaction, the fact that there could be more of a physical component to it, that just makes sense, right? Like that's like a natural evolution. As far as it being like this, I think we need to go outside and interact with human beings a little bit more than we have been. I think that's been something that COVID showed me, that it's great that we can do Zoom and that we can, do like this Instagram live right now. This is awesome. The fact that someone just said, hey, like good morning from India, and I'm in New York City and we're all just interacting here, that's really cool. Now, there is still value in that, but what about just the fact that I think as human beings, we benefit from real world interactions, and there's a lot going on outside that we can still enhance with technology. And I don't think we want to just turn our attention away from that. I don't know if society is necessarily, as I said, benefiting from things becoming more of like a fantasy land. And I can't say that I'm seeing this sort of excitement around the metaverse from people as much as I'm seeing it from businesses and public figures who get attention and press by being excited about it publicly. So we'll see though. I mean, look, I don't count Facebook out. I don't think Facebook is a company you want to count out, or excuse me, Meta. But, there's still a lot to be figured out here. I would not, bet the farm on it yet. I think it's one of these things, put a toe in the water, but don't dive headfirst in right now. This has been Compound Money Quietly, the CMQ Investing Podcast. My name is Chris Franco. Thank you for listening. We'll talk soon.